Le timer on, je suis désolé, mais je vais présenter en anglais. Oh, I'm in charge here. Okay, great. Well, thanks again for the opportunity, Matthew. Matthew's been a long-time supporter. So the problem we solve is customer engagement. So we all know the digital channels have become noisier, more difficult, and for brands, and you'll see we work with some wonderful brands, it's just become more and more difficult to engage with customers, create a meaningful dialogue in that digital channel, and then convert that dialogue to an action. And you know, that's a problem that's not going away, which is good news for us. The way that we solve for that is with personalized video. So essentially what we can do with video is inject data, names, numbers, interactivity, calls to action. Really anything you could do with a website, we can do in the context of a video. And if you think about video, which is the fastest growing medium on the web, it's really kind of like the same as it was when, you know, we were watching movies in the 80s. You know, you put the cassette in, you've got a play button, you've got a fast forward, a rewind button. It's a linear file, it's a closed file. It actually has what's called a capsule around it, which essentially is something designed to keep things from going in and out. So the most popular medium is also the most limited medium. And that's what attracted me to this business 5 years ago when I got involved and invested in it, was this kind of disruptive capability in the video space. People want to see video, they love personalized video. That stat actually comes from a competitor of ours who puts out great stats for us. They have a bigger marketing team than I do. The idea of learning about products and services, you know, a lot of us probably gone on YouTube even just to try to figure something out. This last stat though is really I think the most important one here is the view-through rate. So typical video, again, standard video formats, you're going to get about a 20-25% view-through rate. What that means is how much of the video somebody actually watches. And with our videos, we typically get 85%, 86%, which is essentially usually the end of the video they're getting to the CTA. And what that means is that we have enough time with the consumer, and I'm going to show you one example, thanks to our friend in the back who's going to do a little technical wizardry for me. I'm going to show you one example, and I think we'll bring it home, but we can get people's attention for 70, 80, 90 seconds with personalized videos. Okay, and there's very few companies that can make that claim. That's long enough to explain a product, to tell a story, to build some trust. And that becomes the foundation for somebody to take an action in the digital channel. So, and again, we will show you some examples. This is our, you know, our slide. We work with some of the most wonderful brands that you could possibly work with. We drive great results for them in terms of hits on calls to actions or CTRs, conversion rates, customer satisfaction. We've been historically pretty heavy with financial services. We work with a lot of the leading banks, insurance companies, pension funds, wealth managers. We've just started now to break out into some other verticals. Telco and utilities are two of note. And we have three different sort of categories that we sell into. So we sell to the marketing teams inside of the banks, or inside of our clients, I should say. We sell to the sales teams, and this is an actual new area for us, which allows for salespeople, wealth managers to deliver personalized videos in order to get meetings, book meetings, follow up on meetings, and we have some unique approaches to data and the way we handle content that's particularly attractive to the financial services companies who have a sort of equal concern with compliance and marketing results. And then into video for communications, which is really getting a little bit more into, well, I'm actually going to show you, this is the one we're going to show you. So we do a lot of work around statements, bills, statements. This is usually for most companies, this is the only touch point they have with their customers. It's very often, it's almost always the most frequent touch point, and it's completely under leveraged as a way to actually have a meaningful engagement with a customer. So we're going to show you an example here. This is one of our early projects that we did. And also, the nice thing about having a video company is sometimes you get to sit back and let the videos do the work for you. So we can go ahead and play this, and then I'll contextualize.
March 2019. Your total voluntary savings is this amount, and is distributed as follows. From the total amount shown, this is the investment you've made in Habitat. And this amount is the profit you've earned. Out of the last 12 months, you've contributed 10 months to your voluntary savings account. Remember to contribute each month, since gaps in your contributions can have a direct impact on your retirement pension total. Do you know how much pension income you'll have in retirement? As of March 2019, this is the amount we estimate you'll receive in monthly pension income. Do you feel your pension will meet your retirement goals?
Click no. You can click yes if you want, but it's more interesting if you click no.
Okay, you feel you may need more from your pension. Don't worry, you're not alone.
So, and maybe
what amount do you feel you'll
just
need in
before you
retirement?
go to this part here, you're going to have to tell everybody how much money you need when you retire, when you do this, if you're okay with that. But a lot of times, this is one of the things that we can do is put interactivity into the videos. And as soon as you start putting interactivity in, then the engagement rates go up even higher. And in this case, this is a large pension fund in Chile. A lot of the feedback from the customers was the first time they actually started to see an association between their investing into their pension fund and their retirement. And then we give them this tool. It'll actually model if you want. Okay, but let's say we do that. And so we're actually running like math. We have a math payload right in the video as well.
Okay, based on getting your monthly pension to this amount, here's how much you would need to add to your current contribution to get there by age 65. AFB Habitat, let us help you achieve your goals.
Awesome.
Click here.
Thank you. So, and again, a lot of times there, people are seeing, okay, so $289 extra a month, I come up with that, and it's a meaningful difference in my retirement. I'm only contributing 10 months, I can contribute 12 months. This project has been running for 4 years. It's one of the first projects we sold. We are driving a significant amount of additional assets under management for this pension fund. One of the reasons they keep it and keep people away from the call center. What they were getting before was an email with a PDF statement, nobody was reading it, and then when they get stressed out, they call the call center. You have unhappy customers, and in a lot of these South American markets, there's more competition for the pension dollar. They have these voluntary programs. So it's a great one to show because it shows a lot of the capabilities that we have in the technology. Also the stickiness of the technology, you know, because as I say, it's been running since I took over as CEO in December of 2017, and we sold our first couple of these starting October, November 2018, and this is one of the first ones that we sold. And you can see the, you know, again, we get 70% people watching the whole video, 65% more likely to increase their pension contribution. And we do regular satisfaction scores, which we can put right in the videos, and again, people love this stuff. So we have, you know, reams of these kind of statistics about email open rates and action rates, response rates, all these kind of things. And I'm sure the deck will be made available to you. We are within a month of our year end. Well, our year end is July 31st, so we're within a month of disclosing our year end. So I have Q3 results here. And you know, we're getting to the point now where, you know, the business is moving closer to EBITDA positive. We're being much more aggressive about that, obviously, given the you know, the current backdrop. The appetite for, you know, burn for a couple more years seems to have gone away, which is fine with me. The last 3 companies I built were all bootstrapped, so I'm more comfortable, to be honest, with companies that make money than lose money. But you can see our gross, the parts that matter, especially when it comes to cash, gross profit growing quickly, overall revenue. I'll talk a little bit about services in a second, but overall revenue is growing nicely. Those are quarterly numbers there in the second bucket. Committed ARR is, what we mean by that is sometimes there's a lag for us between when we book a subscription deal and when we actually bring it into recognized revenue, because we have to deliver a project before it goes live. So committed ARR is really the number, because that's what we've sold. Our services revenues grew a lot, and this is a bit of a pivot that we made once we saw, you know, things starting to change out in the marketplace. When I took over the business, actually, it was a digital agency, so we have a services kind of heritage to us. We re-engineered how we deliver the services so we can drive a sort of 50% plus margin on the services. And once we knew we had that figured out, we said, you know, let's put our foot on the gas on the services as well, because that's just cash into the business. It's also very complementary to the SaaS business. A lot of times, just introducing a video into the customer journey is not enough. There's other things that need to be done. There's websites that need to be modified, or email campaigns that need to be designed. Sometimes we work with advertising companies, because what we don't do is drive people to the event. That's what we're going to talk about after. So we said, let's just go for it. If people don't like that we're 50-50 services SaaS. Honestly, I don't care, because it's just more cash in the business. It means it's money I don't have to raise, and it is complementary. Our logo retention, 90%. We have positive net dollar retention, which means the SaaS business grows from our existing book of business before we sell anything. That's the best. You put that with 90% gross margins on a SaaS business, and it's just a matter of time before you've got a real beauty on your hands. And that's, you know, this one's honestly not grown as fast as I originally thought. And the reason for that has been that we've always had to create a video as part of the project. So we go into TD and we say, okay, we're going to help you sell more credit cards, which we're doing. We have to create a video. So there's a services load at the front. You have to sell a services project to get the SaaS business. What we've just got to very recently is more like a Shopify model of video. So it's templated. People can just subscribe to the platform. They can grab from a library of templates. They can build videos from the templates without needing After Effects people, without even needing us. And we're seeing deals now. We've got a couple of deals right now in the funnel that we just started working on like a month ago. And our sales cycles historically have been like 9 months, average 9 months. So there's a lot of really nice things happening here. And I think we've now got the business productized to the point where we can start to see like more of a SaaS type of a ramp to the growth, to the revenue. But you know, we keep delivering the growth anyways. This is kind of a cool slide because we have signed up some great customers. You can sort of see sort of opening ARR on the left and where we're at currently with these customers on the right. And so every time we sign a new one, like some of these ones at the bottom where you don't see the growth yet, that's because they're newer customers. Assurity, Nationwide, we got a bunch of deals in the funnel with Nationwide, Scotia, CIBC. Just by taking those customers on the same journey that we've taken the State Farms and the TDs of the world, some of these others, there's potential to almost double the ARR. And this is just a partial list. But it's really, the reason I like showing this slide is to just show that once we get in there, And a lot of times, like, nobody's heard of this when we go sell it. You know, like, show of hands, have you heard of personalized video before? Right, that doesn't count. Investors aside. So, you know, you have to go in, it's evangelical. You know, what is this? Okay, then you show them, oh, okay, this is interesting. Then they're a little surprised they have to pay, you know, $30,000, $40,000 a year subscription for a video because they're used to paying $10,000 for an explainer video. So you got to re-educate, value sell. It's tough to get into the castle, but once you're in there, once we're in there and they see the results and they see that this technology pays for itself, then these accounts really start to grow. And we've got about 30 accounts that are like this, that all of which have that kind of potential. You know, the addressable market here, just in financial services, honestly, it's significant. If you just take our median case clients and multiply it by the number of banks, we're not going to run out of opportunity with this company, and that's really before we even get to, sorry, there's no way, there's only 3 minutes left. My wife's texting. I promise I won't answer her. There's no way.
8 minutes left.
Oh, okay. I thought I only had 20 minutes.
That'll be fine.
Oh, okay. Oh, relax. I'm going to answer my wife then, if you don't mind. Just kidding. Kidding, as usual. You know, I have built a few companies, and I've sold a few companies. I've taken some public. I've been very lucky, actually, over the years with the opportunities. One of the things that I always do, though, is I try to build a robust kind of channel ecosystem for a small company. We have incredible partners. Quadient is in that world of the billings and the statements. Broadridge is the biggest company nobody's ever heard of. If you want to look those guys up, Doxum, Highland Profit, they're all in that sort of video space. We're now integrating with platforms like Bright Cove, who are video hosting platforms. And then there are also these kind of content engagement platforms that we've started looking at integrating with. We're probably farthest along with Showpad. You know, and eventually you want to get a business to the point where, you know, you don't want anybody to take it off your hands because it's so awesome, or if they are going to take it off your hands, it's going to cost them a lot of money. And typically that's going to be more of a strategic buyer. I've talked about this, different applications for into-video, marketing, customer communications, and sales. This sales example is the newest area for us, and as they say, it's all template based. I don't know if you guys have ever had videos sent to you by email of people waving in the video, or you know, any of those kind of marketing videos. There's a couple of companies like Vidyard, Loom that made a lot of noise through the pandemic in this sort of personalized video, self-recording. The problem with those, there's two problems with those technologies that we solve for. So one is, it's one video at a time. So I make a video, I send it, I make a video, I send it. The other problem is it's a self-recording and a screen recording technology. So the salesperson sits there and records themselves saying, you know, hey, I'd love to have a meeting, and maybe they show some PowerPoint slides. And for some types of companies, that will be fine. But for the companies we serve, like the banks and insurance companies, they will never deploy a technology like that because they need to control the messaging. The compliance is a bigger factor, literally, than the results for the companies we work with. So our capability is all template-based. That was my 20 minutes, Rob. I got all kinds of distractions coming here, I apologize. Everything's template based. So marketing and compliance can pre-approve all the templates. Scripts are built in. If there is a self-recording for the let's say the wealth manager, the types of people we're selling to, mortgage salespeople, could be even somebody in a branch who's reaching out to new customers, all scripted, all locked down. And then the other cool part is, instead of being one at a time, is we integrate into the CRM, and you can create once and then send to 1 million of your customers, and each of those experiences will be personalized. So the two issues with these other technologies are solved for with the way that we handle it. This is brand new for us. Like, it has not even showed up in our revenues yet. It's in our funnel. It's deep into our funnel, and the deals actually are quite attractive, because on top of our typical kind of subscription model, we have a per seat per month model here. So some of these companies have thousands of advisors, and you get in $5, $10, $15 a month per advisor, and all of a sudden the deals get pretty big. So the other thing about it is we can pilot this. So I know this doesn't, for anybody, for anybody who sold SaaS, to sit here and say we can pilot the software, I know it sounds ridiculous. But for us, we always had to create a video. So we never could do free pilots, right? We had to sell them on this whole thing, and they had to commit to $50, $60, $100,000 on something they never done. So now with templates in the library, we can say, great, you love it, we're gonna open it up to you for a couple of weeks. This is why I said, like, we've got a few of these we just opened up in the last few weeks. We could literally close in the next week or so. Because now we can do like free pilot phase. And so that changes everything to more of a classical SaaS kind of funnel versus what we've had, which is like a solution sell in front of SaaS. So, and this is kind of this slide's been around forever. And I mentioned, we've got a big commitment to partners. We're getting wonderful deals through our partners. I mentioned the utility. Actually, these guys aren't listed on here, but like a good example, and this is where this sort of templated thing comes into play. I can tell you this because the first part of it's not material, and there probably will be a press release about this, but we're not getting myself in trouble, I don't think, no. So we've just signed with a company called Acceleron in the United States. And these guys serve the utilities market. And the first client they're bringing us is Florida Light and Power. And so we're creating a video that's an extension of the utility statement that basically says, here's how your bill has changed, probably here's why it went up. In the United States, there's huge payment delinquency problems. So a lot of it is to actually divert them to different options of how to pay their bill, keep them away from the call center. We've just finished a pilot similar with Duke Energy, actually through a different partner. That's why Duke's listed down there. And now we create this thing once. These Acceleron guys have 45 more utilities. So as soon as we get this, and these can be $30,000, $40,000, $50,000 subscriptions each. As soon as we get number one down, we just drop the template into the rest of them. A marketing person can go in and change colors and logos and messaging and make it look like it belongs to the next utility. And we're not in this whole kind of, again, solution sell. It's like everything we're pushing to now is what are the most scalable, most repeatable opportunities that we can support through templates, and we've never had that. So this is why I say we're at an interesting inflection point here. Sorry, this is ridiculous. I'm a very popular man. So then, so partners, existing customers, I showed you the slide, big part of our growth story. And then we continue to sell direct as well, and that sort of model I think is going to accelerate for us. We are selling all over the world. We've got great customers Canada and US, when I took over, this was a digital agency in Toronto. That's what well, Toronto, Montreal, apologies. But all the customers were in Toronto for some reason. South America, Africa, Europe, Southeast Asia, India. India is going to be a good one for us. We've got a pilot with Tata, the biggest company, I think, in the world, something like that. Japan, we have a partner who's desperately trying to sell something for us. I'll believe it when I see it. I have 5 companies in a row I've tried to sell in Japan. If anybody knows how to do it, please let me know later tonight. I'm all ears. But we've really kind of expanded the footprint. This is in the deck. This will give you an idea that, this is for a bank, and then we put telco in there. But across really all the product lines, like we've supported all these product lines up and down the whole customer journey. Awareness, acquisition, onboarding is actually a big thing for these banks and a strength of ours. Renewals, retention. The platform advantages, super scalable. We never touch the personalized data. So we go into the banks and we say we're going to do personalized videos, and they say, well, you might as well leave now because we're not giving you all our credit card customer data. We say we don't ever have to touch it, and we don't. We have a hybrid cloud delivery model that lets us we just get like an ID. We never know who it is. And that's why we've been able to sell to all these banks and insurance companies. Especially for our scale, you can imagine trying to get all that data over to our cloud, forget it. We do provide, if required, full campaign support. We try to push that out to agency partners and give them that work. And then we have really robust analytics, and we use those to sell and to renew. So we create ROI dashboards. If we're helping them acquire new credit card customers, they get a dashboard that says, this is what you're paying a month for your subscription. This is how many people we drove to you who want credit cards. Those are worth whatever, 200 bucks each, 300 bucks each. You got a 10 times ROI. And so when renewal time comes along, we don't get, that's why we have almost 100% logo retention, and that's why we have positive net dollar retention. There are some players in the space. Sunday Sky is, they just got acquired actually for quite a bit of money. Idomu went public. Both Israeli companies. The Israelis love personalized video. Hippo is not really personalized video, but there's been some big money coming into the video space. It's a weird thing though, is that it's not really a space. There aren't, for the fact that video is the fastest growing media, it is the dominant, this is what people consume, we all consume video. We don't get a lot of attention, to be honest. I've talked about all that. Me, my team. I've got a new CFO, I didn't get his picture up there yet. No fair bringing the CFO to these things, by the way. I was going to give you a few slides there at the end. But anyway, so that's our business. And I didn't get into the cap table stuff. We're trading at a little better than 1 times revenue. So I've got the same, sob story as everybody else these days. I'm not unique in that respect, but we've got a beautiful business, beautiful team, disruptive technology. We're growing. We're getting close to where we're just going to be paying all our own bills. That will be coming as fast as we can get there. We've got enough cash to get there, and we know what we're doing. So to me, I don't know, the stock went down to 3.5 cents this week. I can't even look anymore. Be a good chance to pick up some of that stock, to be honest. So I assume you're staying there because you're not so excited. Okay. Yeah. Okay. Thanks very much, everybody. Appreciate it.